Well, howdy there, folks, and welcome into today's video. So we got to talk about Palantir stock here today, okay? Palantir stock is a stock I've been looking into very recently, and spending a good amount of time on this one, trying to understand it from all different angles. And whenever I do research on a stock, like Palantir or any stock, I try to check out their investor relations page, look at different reports, listen to like investor presentations, conference calls, maybe even watch interviews done with CEOs on YouTube, try to find maybe podcasts, anything that can give me like an advantage in understanding a business, especially one that like Palantir, that's not the simplest to understand. And so I like to really spend a lot of my time just doing anything that can, give me a better understanding, including reading articles from other people's perspective or watching videos from other people's perspective on a stock like Palantir. And so what I actually found is I found a very bearish article on Palantir that has come out very recently within the last day or so. And then I also found an article that is very bullish on Palantir. And I thought it would be interesting to look through these different articles. We'll start with the bear one first, right? I always say start with the worst news first, and then we'll go to the bullish news, and we'll go from there, okay? And we'll probably learn some things through this. The bullish one, he has 3 core points on why you should be buying the stock right now. The bearish one has 1 core point on why you should not be buying the stock right now. And so, yeah, I hope you guys enjoyed this as always. I hope you learn a little bit from this, coming from my perspective. I'm kind of looking through something like this and kind of sharing my perspective and looking at somebody else's perspective coming from kind of their way of thinking. So if you don't mind, smash that thumbs up. That helps our little YouTube channel out in a massive way. We have less than 100,000 subscribers on this channel, so by smashing the thumbs up, it just helps us out in a huge way in the YouTube algorithm. I do appreciate you guys as always. And let me know in the comments section what your opinion is on Palantir. I'll be reading through the comments if you guys have any in-depth ones on your perspective on Palantir stock. I would love to kind of read through those guys, and specifically understanding valuation on this stock versus kind of what's going on with the business, because that's big, right? Palantir's got a big valuation on it, so I think it's really, really important. If you're looking to apply for my private stock group, that will be linked in the description. Also have that as the pinned comment down there. And so if you want to check out that, you can do so. Alrighty, guys, so let's start getting into this. I'm actually going to make my face smaller here. So the first one we're going to look at here, we're going to look at this bearish article. Even after the sell-off, steer clear of Palantir stock. It's no longer a meme stock, but richly priced Palantir stock could continue to fall. Just by this headline here, I think it's going to be an article that likely attacks valuation, right? Richly priced, okay? Let's see what they have going on. The epic rise in Palantir stock price started way before meme stocks became a thing. Back in November, on the heels of President Joe Biden's election, investors aggressively bid up the stock, betting that the big data company's ties with incoming administration would pay off big time. But as that momentum from this Biden boost faded, the speculation mania of late January and early February helped sustain it. But now, meme stock madness has dissipated. The stock has sold off in line with other tech names the last month, going into this month. But even after falling from a stunning $45 per share to around $23 per share, it has plenty of room to fall from here, says this individual. Why? Namely, valuation. Okay, so it's clear this individual definitely has an issue with Palantir's valuation, okay? I know for the past year it's been growth at any price. And, they got a good point there, okay? There's no doubt they got a good point. I mean, last year it has been like, just buy a stock, no matter what price it's at. I think that's changing now. Valuations always end up mattering over the long term. There can be short-term periods of time where valuations don't matter. Investors too focused on valuation have lost out, either by skipping on richly priced stocks that soared even higher prices, or worse, by shorting overvalued names that became even more overvalued. That's usually a bad idea. Yet, as investors are starting to reassess this company's long-term value, there's the potential for material contraction given the stock's frothy forward price-to-sales ratio multiple of 28.3. And by the way, they bring out a good point. Shorting a stock based upon valuation is usually a bad decision, because it's overvalued in your opinion doesn't mean it can't continue to go up. So that's why shorting is dangerous, and the losses can be unlimited when it comes to shorting stocks. Okay, but that's not all. There are other concerns at play, like insider selling and the risk of decelerating growth. This is not a buy the dip situation, says this individual. Okay, this is interesting. Valuation is still out of hand with Palantir stock, with projected growth topping 30% per year in 2021 and 2022. It's no surprise investors gave Palantir such a high valuation. But the key factor that's helped to keep the stock frothy is its status as a software as a services stock, SaaS, okay? And we know SaaS companies, they pretty much get the highest valuations you're going to find out there, okay? Or more specifically, the penetration, or the perception, it's a SaaS stock. So far, investors have considered this to be highly scalable SaaS company. That's what I'm trying to figure out. Is this a highly scalable SaaS company or is it not? That's the biggest thing I've been trying to figure out and understand on a very fundamental level with this company, okay? That will eventually scale up into a highly profitable enterprise. Yet, according to a deep dive from a tech industry commentator, the company doesn't really fit into a pure play SaaS category. Instead, it's more like a hybrid software service business like Cloudera. Okay. As you may know, Cloudera sells for a much lower forward price to sales multiple, around 3.7. It's not apples to apples given the company is growing at a much slower pace than Palantir, but it may suggest that a 28x multiple is a little overdone. At most, a 15x forward sales multiple would be more appropriate valuation for Palantir stock. In other words, half of its current price, or $12 per share. Woo! Okay. Yeah, that's quite a difference in opinion there. $12 per share. And it's interesting because a lot of folks feel like this stock is the greatest deal currently at $22, $23, $24 a share, and you have other individuals that think this could easily fall to $12. So this is interesting, kind of hearing these different perspectives out here. But of course, just because a stock should in theory be worth less than it's trading for, doesn't mean that the drop will happen. And even with its recent pullback, there seems to be enough investors buying on the headlines rather than on the details. It may not be a purely SaaS stock, but on the surface, it looks like one. And the growth basically remains high. This is a perception that could continue. Remember, a lot of stocks, it's perception, man. I've seen stocks be so undervalued just because the CEO doesn't know how to tell the story well enough or something like that. Dropbox is a really good example. I think Drew Houston has never really told that story well enough to Wall Street and to investors. And the stock's been a growth beast. It trades at ridiculously silly multiples, and it's never gotten the respect. On the flip side, I look at that and I say, if they can really realize, tell the Dropbox story in a much better way over the coming years, there's no doubt that company's going to 2x, 3x, 4x. But sometimes it's just like some CEOs are really good at telling the story, and I feel like Palantir CEO is really good at that. I feel like Elon Musk over at Tesla is really good at telling the story and getting people excited. And there's certain CEOs that they are not good at that, and their stocks always trade at big discounts to the market or big discounts to their peers, strictly because investors are like, I don't know about that. They're not good. They're not as good as salesmen, right? And so that happens sometimes. Don't forget the other concerns at play. Put it all together, and there are signs that point to additional downward pressure. All right. Other factors that make Palantir a clear sell. Now, this is where the article goes even a little more left, right? Now we're not even talking about not buying a stock. Now it sees, this individual saying this makes Palantir a clear sell. Valuation concerns alone may not be what finally sinks this stock, and that's fading in popularity. I don't know about fading in popularity. I mean, this is a pretty popular stock, okay? So I wouldn't go there. I would definitely push back on that. This is a very, very popular stock, right? There are other factors that could help push shares down to my aforementioned lowball price target. First, insider selling. Last month, the insider lockup on Palantir stock expired. Execs and employees are now free to unload their shares and their positions. So far, the C-suite has taken full advantage. In just the week ending February 26, insider selling hit nearly $112 million. That's a big number. Co-founder Stephen Cohen unloaded $53.6 million of his shares. COO, Shaim Sankar, sorry if I don't pronounce your name right, I'm horrible at pronouncing names, sold $21.5 million. Other C-suite execs sold in the 7-figure range. Woo, okay, man. You know, here's my opinion on insider selling, okay? Sometimes like these people want to diversify wealth. Sometimes they want to go buy a house. Sometimes they want to go buy a yacht. Sometimes they want to go buy a car. Sometimes they want to buy whatever, okay? And they have a lot of money tied up in a company, and sometimes they just want to sell. Maybe they have a new investment they're in, right? Sometimes they don't believe in the company, and they want to sell some shares. It can be any of those situations. We'll never really know, but I can tell you every single time a company goes public, always insiders sell a bunch of shares. It's consistent, man. Almost every single time, guys. So that's something to keep in mind there, okay? The stock's big slide in late February was mainly due to the tech stock correction, but arguably this considerable insider trading played a role as well. These transactions have cooled off since the start of March, but they could pick up again if shares continue to bounce back from their recent losses. Alrighty. With regards to growth concerns, there's a risk that decelerating growth could help further drive declines for Palantir shares, and that assuming it hits its growth targets, as a bearish seeking alpha commentator recently wrote, there are factors, customer concentration, long sales cycles, that could make sustaining an annual growth greater than 30% challenging. Now, this is where we get into this whole thing on what's old Palantir and what's new Palantir, okay? There was much of a view of Palantir in the past that this is true. Palantir in the past, and maybe even to this day, is still really viewed as a lot of customer concentration and very long sales cycles, okay? But where things could maybe differ a little bit in this situation is Palantir seems to be a company now that is focused on branching out. They're hiring a lot more sales folks, right? They are doing partnerships with other companies to sell their products. And so maybe these long sales cycles, maybe this dissipates over the next 5 years. Maybe this is not long sales cycles. Maybe it's like, you know, they pitch the product and then a company signs up and it's like real quick, right? And maybe as this company grows bigger and bigger over time, maybe the customer concentration goes away. So that's where I would push back on this and I would say, wait a minute, you know, true as of right now, but all, you know, as an investor, all you care about is where things are going over the next 3, 5, 7, 10 years, right? That's all that matters as a long-term investor in companies. Short-term, it's a total different story, right? But long-term, all you care about is where a company's going over time. And so customer concentration, long sales cycles, it's been an issue, no doubt, for this company. But is it going to be an issue 2 years from now, 4 years from now, 6 years from now? Maybe not. It remains to be seen, okay, kind of what happens there. To finish out with this bearish article, and then we'll get into the bullish one, okay? Bottom line, with more room to fall, stay away. If all goes right, Palantir may continue to grow at a healthy clip in the coming years. The problem, this scenario has already been priced into shares, and then some. Trading like a SaaS stock when it really isn't. Shares should continue to contract when investors start reassessing their perspective on the company. Add on issues with insider selling and the uncertainty that the company can't hit its growth targets, and Palantir stock may have more room to fall. So what's the best move? Stay away, says this investor, okay? So, interesting perspective. I appreciate the perspective. There are obviously some points I pushed back on there that I'm like, I don't know about that. But I mean, their core point is really, I don't think the point on insider selling is a very strong point because, like I said, all companies that go public, they have insider selling when the lockup periods come. I've never seen it where it doesn't happen, okay? So I just don't think that's a real point. As around growth and those sorts of things, we'll see. You know, we'll see kind of how all that plays out. In valuation, yeah, there's no doubt it has a rich valuation on it. So they brought some good points out here, and there's some other points that I'm like, I don't know if I agree with that. And that's what I'm trying to get to whenever I read these articles, whether they're coming from a bearish perspective on a stock I'm looking into or own, or a bullish perspective, or a video for that matter. I'm trying to really dig deep in like what's going on. You guys remember, you know, recently with, we're going to get into this bull article. You remember with Tattooed Chef, TTCF recently, right? You know, Kevin and I have been going back and forth on that stock. And when I'm trying to really dive in there deep and like get to what is the issue, if he was selling that stock or didn't believe in it as much or something like that, or he believed in other stocks, and really trying to understand it on the deepest level. I think that's the most important thing whenever you're hearing somebody kind of give a point against your stock on why to sell it or why they're not buying it or something like that. Okay, now let's get into the bullish case on the stock. Okay. So this individual, they write a very bullish piece on Palantir, okay? This was written about a month ago. 3 great reasons to buy Palantir stock despite investor fears. Alrighty, okay? So, first point for this individual, sticky government contracts. In its prospectus, Palantir claims that it became the default operating system for data across the U.S. government. Its Gotham platform, which mainly serves government clients, already helps the U.S. military, FBI, CIA, and other government agencies basically make data-driven decisions. Palantir's revenue from government customers rose 73% year over year to $520 million, or 55% of its top line in the first 9 months of 2020. Wow. During the third quarter, it secured a new artificial intelligence contract with the U.S. Army. Okay. Last December, the U.S. Army renewed the second year of a 4-year analytics partnership, which provided for 1 base year and 3 optional years with Palantir. That same month, the Food and Drug Administration, FDA, already uses some of Gotham's tools, awarded Palantir a new 3-year contract to track the development of new drugs. In January, the U.S. Army hired Palantir to modernize its ground stations. This contract will start with the prototype and expand over 4 phases, could be worth up to $250 million. These contracts all indicate Gotham is sticky and will allow Palantir to deploy additional services to boost its average revenue per customer and widen its moat against potential challengers. Alrighty. So, they have a really good point here. Really good point, okay? Government contracts are extremely sticky, okay? The government wants to use somebody. They're not just trying to swap out and swap out and swap out. There's a good sign. And when it comes to data in these sorts of things, right? If the FBI, CIA, the military, the United States military is willing to use you, there's a tremendous amount of trust. And from a branding perspective for Palantir, this is phenomenal. Let's be very clear. You got to be flipping my flapjacks, okay? I mean, if you're any type of large organization out there, there should be no trust issues. If it's good enough for the United States military and the FBI and the CIA to use them, you think it's not good enough for your business? Like, who's better? You know what I mean? So from this perspective, they bring out, I got to say, this is a really, really strong point, okay? Really strong point around government contracts. I love this. This is great stuff, okay? Number 2, growth potential in the enterprise market. Palantir also helps enterprise customers process data with its Foundry platform. The Wall Street bears often claim Foundry faces too much competition in the enterprise analytics market, but Palantir enterprise revenue rose 30% year over year to $320 million, or 45% of its top line in the first 9 months of 2020. During the third quarter, Foundry signed a new contract with the National Institutes of Health, renewed a contract with a big aerospace customer, and pulled a major consumer goods company away from an unnamed rival. Last December, it signed a new 2-year Foundry contract with United Kingdom National Health Service to track the Rona. Throughout January and February, it expanded its Foundry deals to Fuji, BP, and signed new contracts with PG&E, Rio Tinto, and IBM. Ooh, got some big names there. These deals indicate Foundry's tools can be applied to a wide range of industries, including energy management services for PG&E and BP, optimizing mining operations for Rio Tinto, and optimizing AI tools for IBM. And will likely keep growing Gotham's growth as Gotham's growth slows down. Okay. I mean, obviously, the enterprise market is the big opportunity long term for this company, right? There's only going to be so much growth in government for this company over time. It's really about growing in the enterprise, all right? No doubt about that. This year should be a huge year for Palantir when it comes to growing in the enterprise. You know, I've seen numbers as far as Palantir revenue in general expected this year that most folks expect this company to grow a minimum of 30% top line in 2021. But I've seen some folks saying the 30% to 35% growth that a lot of folks expect, they believe that's sandbagging. They believe this company is going to grow 45% to 55% revenue this year. You know, that's some pretty big numbers there if they were to put up that. Even 30 to 35% is good, right? But yeah, if they were to grow 40, 50% clip, then you could definitely justify the valuation much better, right? So, number 3, it's a great artificial intelligence play. AI, we know that's getting bigger and bigger, right? The global AI market could still grow at a compound annual growth rate of 42.2% between 2020 and 2027, according to Grandview Research. As AI tools are increasingly used to process data across a wide range of industries, the secular trend will light a fire under companies like Palantir that process large amounts of data into actionable strategies. Those tailwinds could help Palantir generate high double-digit sales growth over the next decade and could help its stock grow into its premium valuation. Keep an eye on long-term goals. Palantir stock could dip over the next few months as investors take some profits amid concerns. Remember, this was written in February, okay? So, yeah, it has dipped more, no doubt. Concerns about its high valuation and lockup expiration. However, those declines could be great opportunities for long-term investors who are willing to tune out the noise for a few years. So, there's something interesting I'm seeing here, okay, between these two different articles, right? So, and this is where the bulls and bears diverge. This is exactly where the bulls and bears diverge. This is what's so interesting about this Palantir. And this is just one of the reasons why it's been a tough stock for me to kind of wrap my head around, okay? So on one side, we have the bear case, which is attacking, for the most part, valuation. It's overvalued. On the bull side, we got almost no talk of valuation, right? And this is what I've consistently seen from the majority of bulls out there. Some will get into valuation a little bit, but for most of bulls, it's not really about the valuation. They'll talk about, government contracts. They'll talk about expanding into the enterprise. They'll talk about growth rates, things like that. And so this is where we get this big divergence in Palantir stock. And I think this is why this is such an intriguing stock. Do you go with just the business fundamentals and how those are pretty darn strong at this company in building, in where this company can be 3, 5, 7, 10 years out? Or do you go with looking at valuation and saying this company can't fulfill its valuation in any short amount of time? It's going to take 3, 5, 7 years to grow into its valuation. There's some folks that might feel this company might never be able to grow into its valuation. It just depends. And this is where Palantir gets to be really, really interesting, okay? And this is why it's a hard one for me to really, formulate my opinion on, because I'm still trying to understand on the highest level possible with the fundamentals of the business. But also I'm looking at this stock and I'm saying to myself, is this a really good deal if I'm buying this stock and holding it over the next 5 years, or is it a really bad deal? And that's what I'm still trying to figure out with this one. It's difficult. When I bought Tesla, Tesla's obviously my best stock ever, right? When I was buying Tesla in a few years ago, 2 years ago, whatever that was, Tesla was trading at a $30-40 billion market cap. Some folks felt it was overvalued at that time, right? And Palantir, by the way, is trading at around $40 billion right now. But when I looked at Tesla, I said, oh my gosh, this company's growing massively. The stock hasn't gone anywhere in 5-6 years. They're in front of everybody by years and years. And so it's worth a buy. Maybe there's some similarities between this and Palantir. We know ARK Invest. We know Cathie Wood's been buying this stock. And so, yeah, it's one I'm going to continue to spend time on. I'm not just going to let this one go under the radar. I'm going to continue to put in the work for this one, guys. And, don't be surprised if this ends up being a stock I buy in the future. Much love as always, guys. If you don't mind, smash that thumbs up. That helps us out huge in the YouTube algorithm with this little small channel. If you want to apply for my private stock group, that's linked in the description, Financial Fortress, all that. Also be the pinned comment down there.